it's Roger Hamilton with another episode of Entrepreneur TV. Whether you have $10, $100, $1,000 to invest in gold, I'm going to break down step by step exactly how you do it so that you can choose the right option for you. And even if you don't want to or can't invest in gold right now, I'm going to give you the data of what's going on with the crisis right now. And at the end of the video, I'm going to give you the specific steps you can follow as we go into the deeper part of this crisis with the most precious thing that we all have, which is our time. So first, why did I just buy $1 million of gold? This is this week's headline. Gold triumphs record $2,000 per ounce on US stimulus bets. And another one, meanwhile, US economy contracted at a record rate last quarter. Jobless claims rise to 1.43 million. GDP fell 32.9% in the second quarter, the steepest drop in 70 years. And it's not just the US. Here's news from Europe. Europe's economy suffers record 11.9% slump in GDP. So we're seeing the US dollar hitting record lows at the same time that all assets are actually lifting in value. Gold, silver, commodities, Bitcoin, the stock market, the property market, and this is just the beginning of what's to come. My goal in this video is to get you into action to protect your hard-earned dollars from what's about to come. I watch indicators to see where we're going, and here are 3 bright red alarms which are flashing right now. The first is the Buffett indicator. Here is an article on the Buffett indicator that just came out. Warren Buffett's favorite stock market gauge has spiked to a record 170%, underscoring the stark divide between sky-high US stock prices and the pandemic-hit economy. The Buffett indicator takes the entire market capitalization of all US publicly listed companies and then divides that by the quarterly GDP. Buffett wrote in 2001, it is probably the best single measure of where valuations stand at any given moment. And you can see how the last 2 spikes happened just before the dot-com crash and just before the global financial crisis, and now it is spiking at a record high. The second indicator is the negative yield curve. From Forbes magazine, another bear market indicator just fired. What to do about it? The 10-2 spread is the difference between the yield on 10-year US Treasury bonds and 2-year US Treasury bonds. The idea is that in normal times, remember what those were, the bond that you hold for a longer time period, which is the 10-year, will yield more than a 2-year, which means you have a positive yield during those years. However, at times of economic stress, typically late in an economic cycle, the 10-year yield may fall below the 2-year yield. This is called an inverted yield curve. Inversion followed by a return to a normal shaped yield curve, typically forecasts a recession. And you can see in this graph how every single crash and recession in the last 40 years has been preceded by a negative yield curve. In fact, it was this graph from April 2019, which was over a year ago in the Financial Times, which made me warn to our investor community that there was a crisis coming, and that's when I sold all my stocks in the stock market. Because the negative yield curve has been the single most reliable indicator for every single recession in modern times. And I recommended to all our investors that it was time to move from a bull market to a bear market strategy by following these 8 criteria. And while this video isn't about those 8 criteria, if you're interested, do post below, and if there's enough interest, I will do a video on that as well. But why shift to gold instead of other assets right now is because of this third indicator. The third indicator is the debt to GDP ratio. Here's a graph of how much the US debt has been growing against the GDP, and how if you take out all the money that the Fed's been printing, the US economy has actually been dropping over time and has been accelerating in its drop over the last 6 months. And from these 2 graphs, we can see not only is it now over 100% debt to GDP, but with the money the Fed is printing, it's just getting totally out of control. It now takes over $4 of debt to just create $1 of productive GDP. What this means is that the system is truly broken. Central banks try and stimulate the economy when things are down by either dropping interest rates or printing more money. Well, interest rates already have gone down to 0 or below 0, and central banks have printed this year over $6 trillion. That's 2.4 billion every hour, and that's bound to make money itself drop in value. But why buy gold instead of silver or Bitcoin or property? Because of my own personal situation and also what's going on with gold. For me personally, I have a number of businesses that keep over 300 team members and 7,000 partners, either employed or in business. We're supporting over 1 million students and entrepreneurs around the world to either save their business or grow their business during these crisis times. So we have a huge responsibility to keep things growing and flowing, and not to let the lifeblood of our companies, which is the cash, to bleed out. I also have my own personal investments, which are in property, which are in my own businesses, in shares until I sold them all last year, and in commodities. And I always keep around $1 million split between different currencies: US dollar, euro, Singapore dollar, Australian dollar, the yen, and the yuan, so that I'm not too affected by any currency going up and down, but it's a challenge if they all start going down against gold. And for the reasons I'm about to go into, you're gonna see exactly why now is the time that I'm moving more into gold. So of the $1 million of gold I just bought, 200,000 was from my personal accounts and another 800,000 was from my company accounts. And in fact, the companies are even more exposed to volatile or falling currencies than I am personally. In Genius Group, we have a few dozen bank accounts in a dozen different countries, which between them have about a $4 million balance on any particular day. And if you include that together with my own balances, that's $5 million, where a 20% shift in currency is going to mean a loss of $1 million. So here's what's happened between gold and the US dollar over just the last 4 months. It's gone from $1,491 per ounce up to over $2,040 per ounce. That's a jump of 37%. So yes, the cash I have is already down $1.8 million against gold. Now I know you might not have $5 million or $1 million to invest in gold, but this is just as relevant if you have $5 or $1. If someone told you that every one of your dollars has already dropped 37 cents in value over the last 4 months and is going to be doing the same over the next year, I'm sure you'd be taking action. Because why would anyone just hold on to a dollar and see it drop by 70% to just 30 cents by not doing something about it? So why buy gold instead of anything else right now? Reason number one is asset inflation. I talk about why almost all assets are going up in value right now in this video. The money being printed by the central banks is getting pumped into banks and investors and isn't getting to the real economy. So we're seeing all asset prices rise while we're also seeing unemployment, hunger, and poverty rise as well. And central banks are not stopping this madness. Here's an article from Bloomberg which predicts a $10 trillion Fed balance is coming. And before you think, well, everything's gonna be okay as long as the Fed keeps printing money, that's missing the point that almost all of these asset bubbles are going to burst except for gold, and that's because of number two. So reason number two for gold is risk insurance. Gold isn't really an investment in that it doesn't work for you or give you a regular return. As Warren Buffett says, if you own 1 ounce of gold for eternity, you still own 1 ounce of gold at its end. Gold is more like insurance in that it goes up when other things are going down. Assets like stocks and property do work for you in that they do give you a cash return, but at times like this, they are much higher risk because if the return you get drops below the cost of debt, then people have no choice but to sell. And when that happens, that's when you see the crash. Commodities like gold and silver don't have the same carry cost. So as well as growing in price against currencies, they are very unlikely to simply crash. And so they actually hedge you and insure you against the other crashes in the market. And reason number three for now is shrinking supply. So far you could say, yep, but silver, precious metals, they all also give you that same hedge. In fact, while gold has grown 37% in the last 4 months, silver has actually grown over 60%. But for me, there's a reason that gold beats silver. There's simply less of it around now, and the people taking it are actually our central banks and our governments. Here's a graph of how much central banks have been buying up gold before this crisis. Over the last 10 years, they've bought over 5,000 tons of gold, and that's been a record over the last 2 years where they've been buying over 600 tons per year. At $2,000 an ounce, that's over $300 billion of physical gold. And here's an infographic from Bullion Star, which shows the 1,200 tons of gold that's been physically repatriated from the New York and London vaults back to the countries by their governments all around the world. So why are they all buying gold instead of silver? Because gold is at $2,000 an ounce, while silver is at $24 an ounce. So for the same amount of weight that you're shipping and storing, you're getting 80 times the value. And this wave of gold buying isn't slowing down. Yes, it is at a record right now, first time it's been over $2,000, and it may even level off for a while, or if there is a big stock market crash soon, it may even drop because people put their money into US dollars as they're liquidating their assets. But to give you an idea of where things are heading over the next few years, here's a few headlines. CNBC, gold prices could hit 3,500 in 2 years, analysts say. $15,000 gold price. Jim Rickers and Peter Schiff give forecasts. Whether it's the Bank of America $3,000 forecast, the $3,500 or $15,000 number, even at the bottom end of $3,000, that's still another 50% drop in your hard-earned dollars. So I hope you can see why I just bought $1 million of gold now, and I hope I've convinced you to be putting some of your money into gold as well. So there are three main ways that you can invest in gold, and here they are. The first method is physical gold. This could be either gold bars, gold coins, or jewelry. With gold bars, you're actually taking physical delivery of that gold at the gold price. Generally, coins, jewelry, they cost more because they come with a premium and they're more like collectibles. But they also depend on you finding buyers when you want to sell. There can be dealer commissions, sales tax, and other costs added. So unless you want to take this old-fashioned approach to holding onto your own gold, or you happen to be a central bank government, I wouldn't actually recommend this method. First, because there is a risk in buying the gold, in shipping it, in holding it, and then in selling it. And second, because it's simply not as liquid as the other two methods. So I don't actually buy and hold physical gold myself. But if you choose to, make sure that you go with one of the most reputable sellers. There's plenty of them out there. A site like JM Bullion will allow you to buy gold and silver coins and bars and gives you free delivery. Or another option is Money Metals, which also gives you storage options. This starts from coins, which are $200 plus for 1/10 of an ounce, or bars, which are $2,000 plus for an ounce. But frankly, a lot of these smaller bars, because of demand, are actually out of stock right now. Or another option is Bullion Vault in London, which physically stores good delivery bars. These are the same 400 troy ounce bars that you see central banks buying. And you can actually buy or sell fractions of these stored bars from as little as a gram, which means you can start buying gold wholesale for as little as $70. The second method is digital gold. This wasn't even possible a decade ago, but this is how, of the $200,000 of my personal money, I decided to invest in gold. And the reason is because it's pretty much the same as setting up a bank account where the currency of the account is in gold. Many banks now actually make it very easy to shift from a physical currency account to a gold account. So for example, one of my banks in Singapore, which is called UOB, has got this page, which gives the options of gold bars, coins, certificates, and a gold savings account. So I deposited $200,000 into a gold savings account, which effectively means that I can be able to shift in and out whenever I want. The bank makes 3% a year in a handling fee, but I'm happy with that if it means that I've got the ability to be able to shift and have liquidity on my gold whenever I want, but also getting the advantage of the gold price. So do have a look at your bank or your country to see what are the digital gold options that you could take. And the third method is gold exchange traded funds, or ETFs. I decided I'd put the $800,000 that I want to invest in gold in my companies into ETFs, mainly because I found it's easier for companies to invest in ETFs than in digital gold, and it gives the same liquidity. When you invest in an ETF, the issuer is physically buying and storing gold, and then you have the ability to be able to trade just like a share or a commodity on a market. Now, where did I invest? Well, every country has got different capital controls of what it allows you to take out of the country of its own currency. We have funds in South Africa because that's where we have one of our resorts, and it's always a long process to get central bank approval to be able to export any rands, which is the South African currency. And as well as gold having gone up 37% against the US dollar, the US dollar also has been going up against rand. An ounce of gold in January was 21,000 rand. Today is 34,000 rand. That's a 67% jump. So I invested 6.9 million rands, which is around 400,000 US dollars, into the Africa Gold ETF. Here's a graph which actually shows how much that ETF has actually grown this year. So if you choose the same route, make sure that you're picking an ETF which has got a good performance, low fees, and is 100% backed by gold. Every ETF has a fact sheet, so you can see, for example, here's the one on the Africa Gold ETF. And ETFs do have management fees. So for example, this one has a 0.3% fee, but that's a fair price to pay for the liquidity and security that you get. So here's a list of all of the gold ETFs and ETCs, which are gold traded commodities. So they work similar to ETFs, and how they compare. And for the reasons I mentioned earlier, I'm most interested in spreading my investment to the best gold ETFs in each country where our money is. And I recommend you do the same. So in Australia, I invested around 200,000 Australian dollars, which is around about 140,000 US dollars in the Perth Mint Gold ETF. They have a management fee of just 0.18% and are ranked one of the best gold ETFs by Investopedia. And in Singapore, I also invested 400,000 Singapore dollars, which is around 300,000 Australian dollars, in SPDR gold shares. And this is the world's largest gold ETF, which is listed on the New York Stock Exchange, as well as the Singapore and Tokyo stock exchanges. And you can see a chart here of exactly how much they've been growing over this year as well. For me, as you can see, I don't want to have all my eggs in one basket. If a bank fails or a currency collapses, I'd rather have gold in different currencies in different countries. Okay, so if you haven't done this before, how do you invest in a gold ETF? It really is as simple as setting up a trading account and doing your first trade. For example, IG has this page, which not just gives you advice on the best ETFs, but then with one click, you can set up your account. And ETF shares start from $190 a share, so you don't need thousands to get started. Now, there are other ways you can benefit from the growth in gold. So for example, there are ETFs that actually track gold mining companies, and these actually are growing even faster than the gold ETFs. GDX, which is the largest gold mining ETF, has actually grown by 55% this year. But I see this as a higher risk investment because if there are breakdowns in the industry or in the supply chains, then you are at risk of those market breakdowns. But if you don't have $190 to put in the ETF, you can still start with a GDX share, which starts at $45. So that's what I have done. I'm not a financial advisor. This is not financial advice, but it's my personal experience as an entrepreneur of what I'm doing based on the crisis I see continuing over the coming year. Now, what if you don't have any money to invest in gold right now? This video can be just as relevant to protect every dollar you do earn, and to know that this is a time to be investing in the one thing we all have far more precious than gold, which is our time. We all wake up with the same 24 drops of golden time. And over the last 30 years, I've focused a lot more in how I invest my time than how I invest my money. Because when you spend your money, there's always a way to get more, but when you spend your time, it's gone forever. In this crisis, there are more people struggling than ever, but there's also more people with more time than ever. And time can't be saved, but it can easily be wasted. So focus on how you're investing your time in what you know, who you know, and the next steps to take. My 3 golden rules that I've followed every day for the last 30 years: learn more than you earn, deliver more value than you receive, and solve more problems than you create. In my experience, when you do that consistently day after day, the money takes care of itself. Please subscribe to keep up with the latest in this crisis. I hope you found this useful, and if you have, please give this video a like. And if you have your own suggestions or experiences, then please post them in the comments below for everyone else watching. And down below, you'll find links to all the articles that I've mentioned in this video. Thanks very much for watching, and I'll see you again next week.